Well, time to welcome our market guru for the morning. Raamdeo Agrawal joins us. Thanks, Raamdeo, for coming back again, and it's always a pleasure talking to you. Let me start with the first question. You know, what we saw on Friday, and increasingly market experts are now saying that perhaps this government seems to be waking up from its paralysis. We saw two big ticket announcements coming in, a big FDI deal which was hanging for some time being cleared, the company of secretaries moving on that much controversial retail FDI bit. Do you see a sense that there is some movement now happening on that front, and that's something the market is cheering?
Clearly, in last 8-10 days, the series of actions, decisions government has taken, that has given a little more confidence that though we act out of paralysis only, I mean post paralysis only, first we create crisis and then we kind of act, but now there is a hope that yes, government means business, and government would not allow the markets to become completely disappointed with their activities. So government is also sensitive to this particular opinion, and we look forward to kind of continued activities from government side, and that will be good for the market.
Raamdeo, when you say that would be good for the market, other than that, let's look at the other big issue that has weighed on our markets. That's the macro and the inflation story. Now a lot of experts saying that perhaps we've reached the end of the tightening cycle, though the fear is that inflation is not going to come down to single digit till as much as March. In fact, that's something that even Montek Singh Ahluwalia said last week. How would those factors, according to you, pan out, and where do you see the market therefore moving, in what kind of trajectory?
You see today's headlines, again they talk about food security bill, which is likely to not only keep the food prices high in India, but it has potential to keep the food prices all over the world at a slightly higher level because of the volume share India has eventually because of the 15-16% global population here. So I think we are going to see. I mean, we need some kind of agricultural revolution kind of thing to keep the prices under control. Our productivity levels are very low. So if things don't happen in that front, in that case we might have to settle at for a higher levels of inflation overall, rather than this 5-6%. My sense is that inflation is likely to remain somewhat higher than we all want it to be, but you can sacrifice growth to some extent. You cannot keep raising the interest rate just because inflation is high, and it is structural. So I think probably we have to settle for higher inflation and somehow also get 8-9% growth.
Raamdeo, while the government still is hopeful of an 8.5% growth for the end of this year, most experts are now paring down that figure to even some of them going as low as 7 to 7.5%. Where do you stand? Have you relooked at the growth target for the country as a whole?
I'm not trained to look at these numbers in a very professional way, but the government's track record in the past has been the best in terms of predicting the growth rates in the short run, and they have the biggest think tank, they have the most qualified economists under the belt, and they know what they are trying to do. So I would go by what our government is guiding rather than any private economist here and there trying to speak or trying to be out of consensus rather than being practical with whatever is the flow of the data from the government. So I would take what finance minister or chief economic advisor is saying to their face value.
Okay. When we spoke about a little over a month ago, Raamdeo, you were quite disappointed with the Q4 numbers. You said they were below expectations, and you said that you saw a 4% downgrade in FY12. I know it's very early days so far of this quarter's numbers coming out, but the broader sense that you're getting, is it in line with what you expected, or have they come in further lower than what you thought?
No, it's right now in line with what we had expected. So it looks that after last quarter's 4% degradation of number for the year, we are much more, kind of even at the current. I mean, this quarter at the end of it would not see any further major degradation of consensus estimate for this year. So, so far there are not major surprises downward.
So you still maintain that FY12 Sensex EPS would be around 1200?
Yeah, give or take 10 rupees here and there. I think it would be around 1190, 1195, 1200 kind of thing.
The other very important prophecy, so to speak, that you made was about a month and a half ago, where you said that you're actually positive on telecom, and there were still most people who were negative at that point of time, and we finally seen on Friday perhaps the reversal of that undercutting of tariffs, and one of the biggest players coming out and saying we are going to hike. So is that a trigger according to you now that the worst is over for that sector and it's only going to get better from here?
Yeah, I think so. We are passing through the worst, and now structurally, and even the government, if you see today's Mr. Sibbal's interview, it is very clear that government is also uncomfortable seeing the tariff, because their revenues are also going down with the tariffs going down. Income tax is also not happening because none of them are making profits. The revenue share which they get for spectrum and other things, that's also coming down because tariffs are going down every day. And so there is a clear underpricing of a service in this inflationary economy. So there was a good scope. It had to happen one day. Now I think it is just about starting with Bharti in few circles. I'm sure it is going to become much more broad-based all over the country, and there will be some kind of unity among the players, and there will be some consolidation in the industry. And it has, if industry stops fighting and works closely with government, I think this industry has potential to give birth to one of the largest market cap company. And again, we can talk about second round of telecom revolution in India, out of India, and some innovations to come out of India. But it all depends, how the telecom companies, they play the game in the days to come.
Tomorrow is we are going to get a sense from the RBI on what it's going to do in terms of further rate tightening, or is it going to pause? Raamdeo, what are your expectations? I mean, a lot of experts saying that, well, we might continue to see some baby steps, but we pretty much reached a point where we might be peaking out on the tightening side. What is your expectation from the RBI tomorrow?
I think this could be the last, or maybe one before last. So we are very close to the peak of this tightening cycle, and the differential with global interest rate is also very high. So it is going to hurt the competitiveness of the industry in the global marketplace, and imports will become much more competitive. Your exports will become a lot less competitive, and even the affordability at some level in India itself for all the rate sensitives will become far worse. And unfortunately, what happens is that a lot of capital intensive projects, their ROIC is around this 12, 13, 14% kind of thing. And now if your cost of money is also at 12, 13%, all the capital intensity of the industry or growth capex which has to happen into capital intensive segments, that will get completely deferred. We are seeing cement demand is flattening out. There is no, I think this is after a long time that cement demand is growing at 1 or 2% or almost flat. I think for last month or so it was negative. So this is it is definitely postponing all the capex, which is long-term projects. So it is going to hurt the economy now big time. So my sense is that we are closer to the top, and hopefully we'll get some relief in the second part of the year.
The other thing that you had said when we last spoke a month and a half ago, you had said that you see at least the passenger car sector coming into a fair amount of pressure, and that's exactly what's happened, the way it's panned out. In fact, the Jan numbers showed almost a negative growth as far as the car sales were concerned. Two-wheelers, as you said, were less sensitive, and they seem to have continued to ride the storm. So at this point of time, would you say that if you were to pick auto, you would go for a two-wheeler strong company rather than a car maker?
Absolutely, no doubt. I'll always bet on this two-wheeler story out of India, because the level of competition here, despite being very large opportunity, is just about two and a half, three guys kind of competition right now. Going forward, definitely you could see emergence of Honda as a fourth major player in the game. They're already fourth largest. So it is going to be just about that. I mean, all the global players are here. Whereas in cars, the opportunity size is much bigger, but competitive landscape is it's a nightmare. And with the rising yen, I think the only profitable company, Maruti, is also going to see very, very tough time. So I mean, there is no winner kind of situation in the car segment. Whereas here, Bajaj is making about $750 million as almost free cash flow profit kind of for the year. Hero Honda is making about $500 million. So I think profit is all in, growth is there at both the segments. Probably growth is more in car segment, but profit growth or profitable growth is only in two-wheeler as far as the automotive segment is concerned.